The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
All right. Good morning. Happy Tuesday, everybody. It already feels like it's well into the week because yesterday was a very busy day for me around here. Glad to be joining everybody this morning. We'll take a look at some of the small cap names. Just want to share a couple things that are going on around here. I hate surprises. I'm not a person that appreciates a lot of surprises, so I kind of treat everybody else the same way in that sense. One of the things, some changes happening around here, and I'm going to be doing my shows today and Thursday, but just to let everybody know, kind of got some new opportunities that came along recently. I was in the middle of, many of you know that I've been working with moneyshow.com, and I'm going to be continuing to syndicate some blog posts over there, and that's a terrific site. They have a lot of great financial experts from both the trading side, the longer-term investing side, really whatever it is, whatever methodologies you're using or whatever best fits the needs for your portfolio that you're trying to address with any specific type of investment, they have it over there. So I'm going to be syndicating my blog over there. So that arrangement has changed with them just a little bit. They're shifting their focus as well. And as you know, I do write for realmoney.com over at thestreet.com. You can check that out as well. But one of the things that's been happening recently, kind of as Money Show was going through a few changes and I had some opportunities come my way, I'm actually getting ready to be joining an advisory firm called Portfolio LLC. You can check out their website. There's a fellow named Lee Munson who runs that particular company, and he's got a great tactical ETF investing methodology that he uses to really guard against downside risk. So I'm very pleased to be working with him, but unfortunately what that means is I'm not going to be able to be doing this show and the newsletter anymore, and I'm not real happy about that, but that's kind of how things go because you guys are a great audience, and I've really enjoyed working with Tom and his team over there at TFNN. Great group of people all the way around, and I really, really liked this. But as the saying goes, all good things must come to an end. Things are always in flux. One of the constants in life is change. So that's what's going to be going on over here. But I'm with you today and Thursday. We'll be sending out the latest edition of the Low Price Leaders newsletter tomorrow. I'll give you a kind of a final update there on what's going on with a lot of these, the stocks that we have, the positions. We've had some trades in the last week or so that have triggered their trailing stop or stop loss. So I'm going to let you know about that. So you don't want to miss that. So that's what's happening here. And, of course, the folks at TFNN will get in touch with you if you're a subscriber, work out some of the details. There are many, many terrific products over there at TFNN, so not a worry there for anything else that you might want to take a look at with your Tiger dollars and so forth. But they will work that out with you. We'll take care of all of you, not to worry. Okay, so let's see. What I wanted to do today, I always start out this show with a look at the IWM, being the small cap show. And you know what? I mentioned this last week. This is pretty interesting. This is exactly what I was talking about. We had our guest L.A. Little was on the show a week ago today, and this is what he was mentioning as well. What we both kind of were, and I don't make predictions, but I go by what the market is telling me. And what we were both looking at here in terms of what was happening in the market action was some kind of very moderate pullback and orderly correction in the market not some out of control thing. It was, and that has been what has occurred. We're not seeing any kind of free fall here. I mean, look at the IWM. Consolidating very nicely after rallying here for several sessions in a row to a new high. Let me put this up here on a weekly chart for you. And, of course, the IWM being the Russell 2000 ETF. Now, on a weekly chart, I mean, it even looks more orderly, which is going to, because you're talking about logarithmic charts versus arithmetic charts. So easier to take a look at right here on a weekly chart so you can see what's happening. So very orderly consolidation, as we had discussed with LA Little the other day. So basically, that's looking pretty good. Of course, you had all this hysteria around Apple, and I believe it's kind of funny. What had happened was you had a Piper Jaffray analyst who had said 8 million iPhone 5s that he expected to move. And, of course, I'm talking in the broader market, not the IWM, naturally. But, of course, it has been moving in tandem lately. We weren't seeing much divergence in how the indexes were performing. So you had a Piper Jaffray analyst who was expecting to see 8 million iPhones moved, and because, I mean, the iPhone 5 product launch was being treated like a movie opening. I mean, this was just out of control. So when there were approximately 5 million orders that first weekend, and I'm kind of paraphrasing what went on here, but they came in a little bit lower than sort of the opening weekend expectations. Everybody went crazy. Now, we all know there's a lot of people out there who will be getting the iPhone 5s. I mean, heck, maybe I will, I don't know, but weren't going to line up and camp out outside of some store to grab one opening weekend. I mean, even the fact that I'm kind of using the term opening weekend in a little bit of a mocking sense, because that's movie talk. So, you know, the whole thing's gotten a little crazy. I don't know what the guy's expectations were for 8 million that first weekend, or 8 million, you know, in some other time frame. I mean, obviously there's a whole lot of other countries that are opening up where the iPhone 5 has not yet debuted. So that will be happening. So, yeah, so there you go. That's what's happening in the major indices, and it seems that that was also, I'm not sure you can really say Apple news was driving any kind of pullback. Obviously, you're going to see a pullback in the NASDAQ when that happens, and perhaps the S&P 500 as well. But there were other things going on. I mean, obviously, here, let's do this. Let's go over to the SPY and take a look over here at what's going on in the SPY. So there you see that very same rally there in recent weeks. Some flattening out right here. So, you know, it's not unusual after a run-up to see the indices pull back. It's kind of funny that everybody gets shocked when that happens and and thinks that we're all moving into some kind of free fall that resembles 2008. I think it's funny because when you see a market pullback, you see a lot of the pundits begin to get a little panicked, and everybody starts to wonder, is it 2008 all over again? So anyway, so we've got a very orderly pullback, as LA Little and I were discussing last week. I thought he was exactly right about that, and that's what we've got going on today. All right, so what I wanted to do today was take a look. I've been focusing a lot more lately on what's happening with some of the widely held, very liquid ETFs. And I've always done that. That's been something that periodically I've done on the show here, where I've kind of analyzed some of the top holdings in some of these widely traded small cap ETFs. And I want to do that today, and I'll probably do that again in Thursday's show. And one of the things that I want to kind of come back to, what I was saying a few minutes ago, that I will be working with Portfolio and doing a few different things. I want to encourage everybody, please follow me on Twitter at Kate Stalter. Couldn't be easier. My blog, katestalter.com, I'm going to be redirecting that to something called riggedmoney.com. But if you go over to katestalter.com, that will certainly be redirected. So let's see what else. Yeah, follow me on Twitter. Follow me on the blog over there. Also, I'm on LinkedIn. Kate Stalter at LinkedIn. I know a number of you have reached out and contacted me there. Would like to stay in touch with you over there as well. We're all in the money management business. We're all looking for some great investing ideas to make money. And you know what? This is all very, very consistent with everything I've ever said on this show and on this newsletter that we have, our Low Price Leaders newsletter. I've always said you want to take a portion of your portfolio. Sometimes, I've actually said the number 10% of your portfolio. For some people, that can be a little bit different, and yes, it can depend on the assets that you do have, your net worth, the money that you do have that you're able to invest, and the portion that you're able to set aside to trade. I do think it's the case that if you have several $1 million in these accounts, you potentially can set aside a larger amount to be self-directed and be trading. So that's not inconsistent with anything that I've ever said. So you want to carve out that small portion of your portfolio, be looking at some of these smaller cap names, even set aside a small portion to be in the more speculative names. That's why I've kind of never really gotten into the specifics of some of the position sizing on some of these trades, because it's not going to be the same for everybody. I know there are methodologies here that will tell you maybe get into 5, 6, 7 stocks in one of these portfolios. In a lot of these cases, you're not even going to see any kind of recommendations for where you should be allocating. But I've always said keep it proportional, no more, in most accounts, no more than about 10%. And that's why I haven't ever gotten into a whole lot of trades, because we don't want to be assuming that you're going to be in some kind of self-directed small cap portfolio where you're trading 20, 30, 40 stocks on your own. I would absolutely not ever suggest to anybody that they be doing that. So I think we're going to have a break coming up here pretty shortly. And after that, what I want to do is I want to look over some of the holdings within the Russell 2000. Now, what I tend to do, what I've done in the newsletter, has been to look at stocks with a market cap of $2 billion, between about 250, 300 million and 2 billion. And then also we have our low price section where we look at stocks that are trading between $5 and $12 a share. So what I want to do today, though, is we'll go over some of the top holdings within the Russell 2000, and we'll take a look at where they're at, because obviously if you see a big move to the upside or the downside in any of these individual names, that can have an impact on the index, and also depending on where they're heavily weighted in terms of sectors. So we're going to look at that after this break. Be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right. A lot of nice exchanges with folks there in the Tiger Den. Really appreciate all the kind words. I wrote in there. I've really enjoyed getting to know all of you. This has been a lot of fun. I'll be back on Thursday as well. Today is not my last show. Thursday will be the last show. So, okay, what I want to do here, so I left the SPY up there, but let me go ahead and put up some of these, trying to do a few different things at once here. There we go. One of the things, this is funny, one of the things that I learned by being here, doing this show, and I just tried to do it again right there and failed, I really can't talk and type at the same time. It doesn't work. It just doesn't work. So that's, I was just attempting to do that right then. I was putting in the chart for Pharmacyclics, which is a top holding within the IWM. The Russell 2000 ETF, PCYC, is the ticker, and this is about a little bit shy of 0.3% of the holdings within the IWM. So you can take a look there. Now, this is interesting. This is one of these things that I do like to show. Notice how you had a run up here in the last few weeks. So it was more or less in tandem with the general market, really. Now a pullback, more or less in tandem with the general market. Okay, so not really a surprise to see any of that. Let's take a look at what we've got here in terms of what we can expect fundamentally on pharmacyclics. Now, what this one is here, this is one of those biotechs, and I've talked about this on the show before. It's really, from a fundamental perspective, it's a little more speculative because it doesn't have, let me see here. It reported earnings of 30 cents a share in fiscal 2012. And, with these biotechs, it's not a normal thing. So expecting a decline of about 13% to 26 cents a share in fiscal 2013, which we're in right now. And then expecting a loss of 44 cents a share in 2014. The company does have some revenue, but a lot of these, now this makes small molecule drugs to treat cancer. So definitely one of these companies. I mean, I just have so much admiration for all of these scientists who are running these companies and really enjoy just seeing the developments that come out of these things. Now, a lot of times with these, as you know, many times these biotechs that are still in the R&D phase are not really monetizing a lot of their discoveries. We often see that these can be acquisition targets. Let me just see when this one here went public. So this has been public for quite some time. Went public back in 1995, and you see that as well. You see these things that go for years and years and years with no earnings because they're still heavily in R&D. Now this one, even though it's part of the IWM, it is actually now in the mid-cap zone. Market cap of almost $4.4 billion. Not a heck of a lot of liquidity here for a stock with that type of market cap. Moves about 830,000 shares a day. So it's pulling back. And let me go over to a daily here. And this is one, I followed this one off and on for quite some time. It never really, it would not have risen to the level of something that I would have considered a watch list name in the Low Price Leaders newsletter because of those fundamentals, because of that erratic earnings performance, because, and again, the same is true, with the revenue on these things, it's just, a lot of these are from some kind of licensing deal, not for something that's necessarily productized, but they are able to license out the technology to other researchers and drug companies. So that's how the revenue kind of works in a lot of these cases. This is an industry that has all its own rules and regulations, and these small cap or mid cap, as this one is, these biotechs that really are not yet productizing things, it can be very, very difficult to understand these businesses and get in on these. And also, you can get shaken out very quickly if there's some kind of announcement regarding clinical trials that are disappointing, or something along the lines of an FDA approval that does not come as expected. But anyway, this is an interesting name, and I have to say this has bubbled up to my technical charts for quite some time now. Interesting that it is such a big holding in the IWM. Stick around. We'll be right back after these messages.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. If you've heard Tom O'Brien on the air and you've seen him on Tiger TV as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. If you're a trader thirsty for knowledge, then we have the perfect event for you. Tom O'Brien will be hosting a live 4-hour dynamic trading strategies workshop on September 29th in the Tampa area. This one-of-a-kind workshop takes place from 8 a.m. till noon and is completely free. We'll even be giving away almost $2,000 in door prizes randomly drawn from those that attend live. Along with diagnostic trading expert Daryl Martin, Tom O'Brien will teach you how to identify and set up your trades using dynamic trading strategies, and Daryl Martin will teach you his diagnostic trading formula, including the strategy, system, and style that gives you an edge in this market. For more information and to reserve your spot today for the September 29th free Dynamic Trading Strategies Workshop in Tampa, please visit the front page of TFNN.com. Don't wait to act, as space is limited. Sign up today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right. Welcome back to this segment of today's Small Cap Roundup. So let's see here. Wanted to put up a different chart for you here. You know, some of the REITs, let me just pull up this, because as I just mentioned, I don't do well when I try to talk and type at the same time. You're going to laugh. Here's a ticker that is Two Harbors Investment, and this is another big component there in the IWM. And the reason I said you're going to laugh, I had trouble remembering the ticker, TWO, Two Harbors. Yeah, that's tough, isn't it? Actually, the reason I had trouble remembering it is this is not really one that I have regularly been following. It's not that I'm against REITs. I had somebody ask me that recently, how I feel about REITs. Not against them at all. I'm completely agnostic when it comes to any particular type of investment when it comes to the various sectors within the equity markets. Now this is interesting. This has one of those ridiculously high yields, 12.2%. It's a REIT that invests and finances residential mortgage-backed securities, so that has something to do with that high yield you're seeing right there. Now, this has been an interesting gainer as well. recently. You're seeing some good revenue growth on this particular name. You're seeing, I've got that for you there on a daily chart. So you do see in recent sessions, again, very familiar, right? Kind of flattening out a little bit there. Let me put this up here on a weekly chart. I see, Joe just mentioned the same thing that I was mentioning there. Yeah, this is just one of those crazy yield REITs. Let's see here. Terrific liquidity on this name. More than 5 million shares a day. The reason that I hadn't necessarily just kind of sticking to some of my methodology for how I track some of these names, first of all, in terms of the small cap newsletter, this one had moved before. Let me say this differently. Okay, fundamentally, we have seen a marked slowdown in the earnings growth in recent quarters, going from 58% earnings growth in the quarter ended June of 2011, decelerating every quarter since. Now, on a revenue basis, the performance has been outstanding. The estimates here, we're looking at, let's see, for 2012, expected to earn $1.43 per share. For 2013, expected to see a slight increase to $1.50 a share. So some good performance there. The company has been profitable, as you'd expect, of course, looking at that dividend yield. Got a good bounce off its 10-week moving average recently and has been climbing higher. So this is an interesting name. There's a few reasons why it hasn't necessarily popped up on my screens recently, but nonetheless, this is a pretty nice performer, getting a nice bounce in today's trade. Let me see what we're doing here on a daily basis. I'll put this back up on a daily chart for you right here. So actually getting a bounce on the week, but reversed off some earlier lows today, but nonetheless holding up very, very nicely. So, this has some things to recommend it both fundamentally and technically. Just be aware of what you're seeing there in terms of that earnings growth slowdown in the past few quarters. So that's a pretty interesting one there. Now here's another one that I've talked about a lot. Not necessarily on here, more in my columns that I've been doing for Real Money, though I have mentioned it on the show a few times. This is Athena Health, ATHN, and you do see kind of a big move there intraday in what's been going on there. You had a move below some of the key moving averages and then kind of rebounded as the markets were trading higher right there. We did see that occur. Now, what I'm liking here, this one, let me just give you the beta of this particular stock right here, because this is one that can, let's see, this is not surprising because we see this kind of thing happen on this stock a lot. It's got a beta of 1.12. So, it's not unusual to see some swings in this particular stock. Now, what was happening here is the company actually lost out on a deal to QSII, so that kind of caused some pessimism in the stock this morning, but it did rally right back. And again, just not unusual. We've got market cap here of about $3.2 billion, somewhat on the illiquid side, considering that average daily volume about 439,000. And this is another example of one where we've seen some slowing in that earnings growth, so be careful about that. Although the revenue growth has been in the double digits, you see that a lot in some of these fairly newer companies. When you do see a bit of a disconnect between the better performing revenue growth and earnings growth, and in that case, frankly, I would default to the revenue myself, as long as that remains steady and growing at double or triple digit rates. Pretty new IPO, as many of you know. I do like to track the newly public companies, and by that, I'm talking about stocks that went public in the past 10, 12 years or so, because those are often some of the market's best performers. This one went public in September 2007. So just a few weeks ahead of the time that the big market correction got underway, if you remember, at the end of October, beginning of November 2007. So Athena Health was just in time for that. George W. Bush was still president at the time. We had not yet had the election. And the CEO of Athena Health, Jonathan Bush, he is a cousin of George W. But, what's interesting, and I've pointed this out quite a bit, in many ways, this company has been a beneficiary of some of Obama's interests and policies and initiatives, and also, frankly, let's put aside whoever's president, because there's just a lot of things that, of course, happen in the market regardless of which political party is in there and which president is in the Oval Office or on the golf course. A lot of the move towards bringing the healthcare industry and many, many other industries into the computer age, as Athena Health does. It specializes in digitizing medical records. So many of these companies really have just benefited from trends and shifts in technologies and ways of doing business, regardless of who's in the White House, quite frankly. It was interesting. Yesterday, I was with a good friend at some medical appointments, and fortunately, it looks like it's all working out very well, but there was a bit of a scare. And I went along to some medical appointments yesterday, and it is always interesting to see the industry and to see how it is changing and to see the areas in which certain things are very easy to access for the medical providers and certain others are not. It was kind of funny. There were some records they were looking for, and they actually had to make a phone call and get some things faxed. So that was a little old school to see that. But I'm sure, give this another year or two. These things are changing at very, very rapid paces. So give that another year or two. Wouldn't be surprising to see that change yet again. Okay, let's move on here and take a look at another one. Let me put this up for you, and I've talked about this one in the past as well. Cubist. CBST. Now, this is another one of these healthcare names. This is Cubist Pharmaceuticals, and this company makes anti-infection products. And I was just talking about being in the medical office environment. They specialize in anti-infection products for medical treatment offices and hospitals, the acute care environment. So you see, again, take a look at this. Just look at this stock. I've got that for you on a daily. Let me move this back over to a weekly chart. Okay, there we go. So there's Cubist on a weekly. Pretty nice move here. Now, this is one that, frankly, has met quite a few of my technical and fundamental criteria recently. This really just recently, with some of these recent price rises, did enter the mid-cap zone. Market cap of $3.1 billion, trades about 747,000 shares a day. Let's see here. I want to just remind myself and everybody else of when this went public. So this went public also back in 95, so not really so much in that newer zone, but we're at multi-year highs right now with this particular stock, looking very, very good. We had a turnaround here. Let's see. Expecting an earnings drop this year, down 27% to $1.88 per share. So, you want to be a little bit careful when you do see some of these, although very often if there is some kind of fundamental decline like that is priced in, that's not going to necessarily affect your price run up there. And you could still see something rallying to new highs if the stock and the company is meeting expectations. Now you see down here some tepid volume really nothing tremendously to write home about as the stock has rallied. That's a little bit of a point of contention. I know that a lot of technical analysts do traditionally look for heavier volume as a price is running higher. Some of that has tended to change a little bit, though. In the past year or two, you have seen many stocks rallying higher on lower volume, on below average volume. And frankly, a lot of folks have had to kind of really adjust their perspective a little bit to just make the note that price is what's primary. No kidding, of course. Price is what you're going to be looking for. I mean, it's hard to argue with something. If you're seeing something rallying to new highs on lower volume, how can you really have that argument with somebody about, well, volume is low, so it doesn't count? Now, I mean, I've heard people try to have that argument, and it's pretty ridiculous. Now, it doesn't mean that you don't want to put some cautions in place. As you've heard many times on this show, I do caution people, and I do in the newsletter, to use trailing stops once your stock has rallied higher. You want to have some kind of methodology. Mine are keyed off of the shorter-term moving averages since I'm in more of a trader mode. But if you have something that you've held longer term, let's say you've owned Cubist for quite some time here. Maybe you bought in way down here. You might be able to sit through some kind of correction back to, say, the 10-week line. And let me put this up here on a daily chart to better illustrate what I'm talking about here. We'll use the 50-day line as a proxy here. So that 50-day line is pretty far below what we're seeing right now, but of course we're expecting that to be moving higher. It'll reflect some of these price trends in the past few sessions. So we'll see that moving up. If you have a cushion in a stock and it's something that you've owned for quite some time, you've sat through some earlier corrections, then maybe you can sit through another correction at this juncture. But if it's something where you entered more recently, where you've, say, maybe bought as it came out of one of the consolidations over here, or bought as it crossed above its 5-day or 15-day line on a shorter-term basis, you might want to be watching this pretty carefully and be holding on to your gains. So let me just take a look here. Yeah, this one closed 1% below its 5-day line yesterday. A lot of times what I'll do is be looking for a close of 2% below that 5-day line, because just a lot of times what I've seen recently is that will be your marker where a stock could be in for a longer correction below some of those shorter-term key moving averages, and you can not only protect your capital, but as long as a market rally does remain intact, you have some money then that you can turn around and put into a stock that is performing better. So you don't have to keep it parked in something that is consolidating if you want to keep some of those shorter-term gains. So they're just some of the nuances to how some of these swing trading approaches can work. Not necessarily just a percentage decline that a lot of folks sometimes are looking for. I'm finding that hasn't really worked so well in the past couple of years. Okay, there's Tom Petty. Stick around. We will be back with the final segment of today's Small Cap Roundup right after these messages.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question, are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this. Today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right. Welcome back. Final segment of today's Small Cap Roundup. These shows always just go so fast. So I think, actually, I was thinking about it a little bit on the break. I've been showing you some of the components today from the IWM. I think what I want to do on Thursday's show, and that'll be our last show, I think I want to talk a little bit more about the IPO market, and if we have time, we'll get into some of the components of the Russell 2000. Actually, no, what I meant by that was, see, I'm trying to type again and talk. Get into some of the components of the S&P 600. Today we're looking at the Russell 2000. So another top holding here, and I've been talking a little bit about the healthcare market and some healthcare related names before the break. You know, what you could say is a related subsector or sector, I guess, because it really, I think, falls under consumer staples, would be this natural foods subsector. I mean, you've got Whole Foods. I think you had Vitamin Cottage. I can't remember whether it went public already or whether it filed, but that's one that's coming up. You have the fresh market. Now, I've put a chart up in front of you, a company called United Natural Foods, which is a distributor of organic groceries and health foods to many of these companies, many of these grocery stores, of course. Now this one, this is kind of interesting. You see a nice big gap down here. Nice, well, not really, because there weren't really any particular signals to be shorting this name. But look what happened. This is what you see a lot of times when you get these stocks that do show particular levels of strength. And I think I just messed up my chart there. I hope it's still okay on the screen. If it's not, I will refresh that. There we go. So let me pull this up here on a weekly for you. Now you notice how this one on a weekly chart, it kind of smooths out some of these major pullbacks just a little bit. So, okay, so NGVC is already trading. Okay, thank you. That's funny. I was just in that store the other day. It is amazing to me. We have so many of these companies, and it's relevant to what we're talking about here with the UNFI chart right in front of you right here. As I said, you've got Whole Foods, you've got Natural Grocer Vitamin Cottage. That's the NGVC. You've got the Sprouts Market, which is not public but recently acquired Sunflower. In fact, they're making the change over right here. You've got the Fresh Market. You know, you had several years ago, you had Whole Foods acquiring Wild Oat. So just a lot going on in that particular segment of the industry. You've got more people going vegan, vegetarian. I mean, I'm hearing more people every day talking about vegan, vegetarian. I'm kind of moving more in that direction myself, to be honest with you. I've cut out a lot of the animal products from my diet, and I feel a lot better, really noticing it. But it's not just that. I mean, you can walk into a Whole Foods and find, or a Sprouts Market or any of these, and find all the sugar you want. It's not going to be high fructose corn syrup, but you could certainly pack on the pounds eating the so-called healthy foods. So United Natural, looking good here, has a beta of about 1.05, so it's a bit of a high beta stock. I like the fundamentals on this. Some double-digit growth expected in each of the next 2 years. So, and again, I'm looking at the Tiger Den. I see Joe right there. I spent half my income at Vitamin Cottage. I know. Joe and everybody, you know what bugs me about Vitamin Cottage, though? I don't like that they don't have bags. I walked out of there the other day because I didn't have a bag and I didn't want to buy one of their canvas bags. And I walked out of there and I drove down the street to Sprouts. Now, you know, it's not a militant thing. It's just, I wasn't feeling like buying a bag or schlepping a bunch of stuff in my arms. So one of these days I'll bring my own bag next time I go back there. Okay, that's a wrap for today. We'll take a look at Vitamin Cottage and some of these newer IPOs in Thursday's show. Thanks for listening, and I'll be back again on Thursday.